Hello guys, a very good morning and welcome to Morning Trade with me, Stacy Pereira. We're here to be looking at a whole host of queries firstly that you'll be sending on to us, and all of our guests will try and answer those. But we also have a very interesting market setup. We're seeing 5 days of losses that have happened and likely pressure to continue because a lot of these counters, most of these indexes are now looking at negative returns. The Bank Nifty already turning negative for this session. So we are going to get into all those details of what really the stock should be using, the kind of strategies you should be taking up to navigate through this volatility, and also all of your queries that will be addressed through the course of the show. So stay with us. And before we get to that, let me get you all the headlines we're getting from the global handover. Now, big tech losses were the ones that really took it on the chin with that sell-off that we saw on Wall Street. The Nasdaq correcting over 2% in its worst day since February 2021. Asian markets are also trading largely lower, while the GIFT Nifty is implying a gap down start for the Indian markets. Crude prices have moved higher, led by worries over the escalation of conflict in West Asia. Brent is trading at about $90 a barrel currently. And Axis Bank's second quarter numbers have beat estimates as the loan growth has hit a 7-year high. The bank also sees a net interest margins expansion in contrast to its peers. Meanwhile, if you look at Tech Mahindra, that one delivered a big miss as revenues have declined by over 2%, while margins too have disappointed. And in key earnings today, we are going to be tracking a strong quarter is expected from Asian Paints as raw material prices have cooled off. Also look out for numbers from ACC, Colgate, Canara Bank as well as Dixon Technologies. And Israeli Prime Minister Benjamin Netanyahu says that the country's war cabinet is working round the clock to be prepared for the ground invasion of Gaza City. Meanwhile, US President Joe Biden makes a fresh call for a two-state solution after the war against Hamas. Now, we did see some bit of positive news when it came to those declining bond yields, but that happened a day before yesterday, and that course really reversed again. We are seeing bond yields again hit the roof. Now, we are seeing crude prices as well go cross that $90 per barrel once again, and that all is really what you're seeing markets react to. We're seeing 5 days of consecutive losses here on Dalal Street. Not a very good picture, not a good handover that we're getting from global markets either. None of those big triggers to really take market to any kind of direction that we're seeing. And of course, these geopolitical tensions are likely to continue. There's no respite that we've seen, no kind of middle ground that is being reached yet. So what is the strategy that investors should be opting for? Should there be a cautious approach till markets find some bit of clarity? Let's discuss this with our guests, and joining me for that today is Rahul Malani. Firstly, we're going to be talking about the broader picture. We're seeing how markets are reacting, of course, to what is happening globally, but also back home, there are no big triggers. We were hoping that these Q2 results will really be giving some bit of direction. And if you have to look at banking stocks specifically, we're seeing Bank Nifty really take it on the chin, going below that 43,000 levels as well. So Rahul, give us a sense of what you're getting from where we can go from here, because this is already laid out now for us what we're seeing happen globally as well as here. But give us a picture of what is the likely triggers from here.
So first of all, good morning. There are certain headwinds emerging in the banking sector. Firstly, the deposit growth has been challenging, which should push the cost of deposits further higher, and ultimately which should keep the margins of the banks under pressure. Earlier, the expectation was that the cost of deposits is likely to peak out by the end of H1 of FY24, but the strong momentum in the loan growth as well as the challenging deposit environment as pushing for the higher deposit real rates altogether till now, and which should put NIMs under pressure for the banks. Secondly, in terms of asset quality, where in the small ticket size unsecured loans, we are seeing some stress building up as per the bureau reports. The general expectation is that this stress which is building up in the small ticket size unsecured loan would if spilled over the large ticket size would be a concern in terms of credit cost as well as the asset quality for the banks. Thirdly, the general expectation is that the return ratios in the banking sectors have topped out. So here on, a re-rating triggers are very unlikely from here on, at least in the near term. So banking stocks, despite reporting strong results, have underperformed the markets.
Right. Right. Let me also bring in Brijesh Ail. He's the head of technical and derivatives at IDBI Capital. Brijesh, give us a sense of the charts. What the charts are really saying at this point. Nifty as well as the Bank Nifty. We'll speak in detail about the Bank Nifty. First, give us the levels that we could be watching out for, because we've already breached that 19,200 levels for the Nifty. So, what are we likely to see? More correction is what is expected.
Yeah, morning everyone, morning ma'am. So definitely the charts are not very positive. We have seen a good amount of sell-off in the yesterday's session as well. So eventually we believe that 19,500, then 19,200, these were the major supports which market was likely to be held. But then the way yesterday the market corrected, I think we are heading for 19,000. And the earlier, if you see, the support was somewhere close to 18,800 level. So more or less, we should be approaching those levels is what I believe. So the structure is negative. The Nifty, from the technical point of view, it has broken the 50-day moving average. So whenever there is a tendency, whenever the market breaks 50-day moving average, it normally comes close to the 200-day moving average. So the level for the 200-day moving average is 18,600. So I might not be talking of 18,600, but then there is a fair chances that 19,000 will be broken, 18,800. This would be the area where there are early chances that market might find some support, but it's too early to comment. But the bias remains negative. Any bounce close to 19,500 should be viewed as an exit opportunity, because the fear of this 19,000 being getting broken is very high for the Nifty.
Right. So we're looking at breaching even those 19,000 levels. That's the sentiment on the street, at least. But Brijesh, let's talk about the larger picture then for the Bank Nifty. Now, yesterday we saw the Bank Nifty take some sharp cuts, in fact, turning negative for 2023. So how is one supposed to be looking at that counter? And also all the banking stocks, like Rahul was just pointing out at this point, the earnings haven't been, that great. They're pretty much in line so far, what we've seen, at least from the private banks. So how is one looking at the Bank Nifty and what are the levels there?
Yeah, so for the specific, today being an expiry, I think 42,600 is the area where there is a put tracking is been observed. So I believe during the day, if whenever 42,600 level is broken, then I think there can be further correction in the Bank Nifty. Bank Nifty is weak because Bank Nifty is broken its 200-day moving average, which is not a very good sign. What we can see, Bank Nifty is in the oversold zone. So many people would be believing that we will be talking of any intraday bounce or trading bounce, but that's seriously a concern. From the derivatives point of view, 42,600 is the immediate trigger. I believe if those levels are broken during the day, then I would be looking to add any put options for the intraday as well as the expiry trade. One should clearly take the negative bias. We'll just take a view for first 1 hour trade. If 42,600 is broken, then that is Bank Nifty is going to further decline further. On the way up, 43,500, which is quite a bit on the higher side. So until unless 43,500 is not taken out, the Bank Nifty is not going to see any major upside. So specifically, the structure is it is more weaker than the Nifty. So Bank Nifty is going to underperform, is what I believe. Stock specific, IndusInd Bank was the only one stock for over the last couple of days which was holding to its strength. So I think if Bank Nifty doesn't break 42,600, or by any chance there is some bounce in the Bank Nifty, then IndusInd Bank is one counter where some buying can be seen. Additional to this, AU Small Finance Bank, which is trading close to 707, that is one stock which has come to the support levels. So I think these are the two counters which we can keep and watch. Only if the market takes supports at 42,600 and that level is not broken, then these two stocks can be kept on a watch list.
Right, so we have to be watching out for those level 42,600 is what he's saying at this point. But like we're talking about bank and banking stocks, we did see Axis Bank come out with its Q2 numbers yesterday, where they've pretty much beat estimates, we could say. The private sector lender has recorded a standalone profit of 5,864 crores for this quarter ending September, growing almost 10% over a year ago. Now, this despite having higher provisions, which has been a bone of contention among most of these private banks, we could say. Operating profits, though, as well as their core operating profit, has increased by about 12% each on a YOY basis. The net interest income, too, has grown by about 19%, coming in at 12,315 crores, whereas deposits have risen by about 18%, with advances going up by 23% on a YOY basis. If you look at the asset quality, too, that one has improved during the quarter. Gross NPAs falling by 23 basis points on a quarter-on-quarter basis, about 1.73%, whereas net NPAs have declined by 5 basis points, coming at just about 0.36%. So Axis Bank also pretty much fitting in line with what we've seen other private banks. But let me get Rahul Malani now to give us a sense of this particular counter among the banking stocks also, and whether he thinks it would be a good point to be looking at any particular bank stocks, and what should one be looking out for. Like, even they've pointed out provisions have improved. So what are these trigger points that we should be looking out for in terms of banks?
So overall, specific to the Axis Bank results, overall it has outperformed on the margins front versus the peers. If we look at the loan growth has been in line with the peers, with the core peers. In terms of cost ratio, in terms of it, the ratios are expected to be elevated in the near term, which should keep the operating profit growth under check. While the asset quality outlook continues to remain strong for the overall sector, so earnings would be driven by the strong asset quality outlook, in turn lower credit costs. So in terms of specific to the Axis Bank, we believe that near-term pressure on margins would be manageable by the better loan mix and better spreads. Also, elevated cost ratios are likely to be perceived in the near term. However, the strong asset quality is likely to drive strong earnings for the bank.
Right. So Axis Bank, they're outperforming what its peers have done so far, but we also have PSU banks to be looking forward to before we take a view on banks as a whole, and those numbers are still weighted. We have SBI and the likes. Today we have Canara Bank, so a couple of PSU names that will be coming out with their numbers, and then we can take a larger call on the banking sector as a whole. But let's get into a couple of stocks that are making news. One that would be in focus today, will that be of Adani Group stocks. Now this is because the National Financial Reporting Authority, or NFRA, has written to all of Adani's past auditors in the company. Now they have asked them information on over 100 plus questions, is what we're being told, and the NFRA has also seek information on the issues like related party transactions that have happened among them. One of the auditors have also been asked to send in their audit files for the previous years that they've audited the company till up to FY22. Now Adani Group has come out and also clarified on this, saying that they've strongly rejected any of these claims of not acting as per regulations, and also rejecting any suggestions that they didn't act according to the accounting standards. That's what they're being accused of. So we are going to see some bit of action coming there from the Adani Group as well. And like we're talking about taking action, we also saw SEBI yesterday, who came out and has fined BAP of Charts. Now this is founded by Mohammad Nasiruddin Ansari, and he was fined for about 17 crores. Now what is SEBI's contention? SEBI has said that Ansari was providing misleading recommendations on social media, as well as selling marketing courses. Now there's no problem in this, because we've seen mushrooming sort of finfluencers who've come out and done this, but then why have they really pulled him out is what needs to be seen. They've also alleged that he was providing misleading recommendations in the garb of providing educational training. Now, this is quite harsh in terms of what they're accusing Ansari of. Also, he has to pay that 17 crores worth of fine and cannot be trading after this. So the SEBI really cracking the whip there when it comes to how it wants to look at influencers or even those who are trading without any kind of regulation. So really cracking the whip, we could say. But let's also look at a couple of broader sense of markets. We have done pretty much with the IT earnings. We just had Tech Mahindra that came out with its numbers yesterday, and well, it wasn't a great set, a miss on the revenue as well as margins, all of that. But pretty much what we're seeing IT stocks do. So let me, get in Brijesh once more and get a sense of how one should be looking at IT stocks at this point. We just saw a couple of reports that said, FIIs and big institutions are still pumping in money despite that, weak quarter that we saw in Q2. So is it the right time, because we're seeing these kind of corrections come in for the stocks? Is IT something we should be looking at, Brijesh?
If you're given a choice, if you want to take a buy position from the medium to long-term perspective, then definitely IT is one space where we can find some strength. The stocks like TCS and Tech Mahindra have seen a decent correction. It's coming to the support levels. So I believe this can be a contra bet, and somebody who's looking to take a little bit of longer time frame can bet on TCS as well as Tech Mahindra. Whereas beside this, there is one stock, Persistent. This is from the mid-cap space. I think the stock has very strongly holding to its strength. At the level of this 5,800, it's very strong. And from the derivatives point of view, also there is continuous long build-up seen in the Persistent. So I think this Persistent can be more of a trading bet, and TCS and Tech Mahindra can be viewed from the positional bet. So I definitely believe this opportunity should be viewed as a buying opportunity.
Right. Well, let's also get a couple of queries answered. Then we have one coming in from Sai Prasad Danekar, and he is asking whether it's a good time to be looking at investing into Lemon Tree. We did see even Chalet Hotels that came out and was quite active in trade, but he wants to know specifically on Lemon Tree. Brijesh.
Yeah. So we are extremely positive on the hotel stocks, Lemon Tree, the Chalet Hotels, Indian hotels, and recently the Lemon Tree has corrected, and this 108 level is a very decent level to take an entry. 100 is the maximum correction which it can see in case of further sell-off. So definitely the timing for the 100 point would be a bit difficult. I believe this level should be viewed as a buying opportunity, because as a near term, it can easily scale above 140, 150 on the higher side. So this decline should be, this corrections in the Lemon Tree should be viewed as a buying opportunity.
Right, so buying opportunity for Lemon Tree. Let's get in a couple more queries. We're also getting Nisha Pradeep, who's asking your view on Indigo. Now, aviation has been quite seeing those swings. We're seeing, we see news of pilots being fired or being dragged to court from Akasa Air, whereas Indigo has always maintained a good rapport in that sense and has seen some steady bit of growth also, commands that huge market share when it comes to these players as well. So how should one be looking at Indigo Airlines?
So the stock is not corrected, maybe because the market there has been slight decline. So the monthly and the quarterly charts of the Indigo is quite strong positive. So but having said this, the maximum correction which what we can see in Indigo is somewhere at 2350 levels. So I would ask to wait and watch because the risk reward ratio closer to 2350 would be very perfect. Like there would be a very limited downside from those levels. So I would recommend to wait for that levels to come. Maybe the market is not looking that positive. So maybe with the overall market coming down, there's a possibility this will come close to 2350. So that remains a very good buying opportunity for the Indigo. Slight wait for the entry level is what I believe.
Right. So wait for a good opportunity entry level and then go. At least hope that answers Nisha Pradeep's question. But we do have a lot of action that we're seeing in the primary markets, and come Diwali, we're going to see even more, stocks that want to list on the Lal Street. One that we're going to see in the near future is going to be that of Honasa Consumers. This, remember, is the parent of Mama Earth, and it's looking to IPO or at least open for subscription by October 31st. That is almost next week. Now, it's interesting because it's one coming from that startup space, also a unicorn that it was. So there is a lot of interest that one would see when it comes to Mama Earth. Now, today is when they're going to be officially revealing what that price band is. But what we are giving to understand that the range is going to be somewhere in that 320 to 335 rupees per share is what we are picking up at this point. The upper end will perhaps unlikely go above 350 rupees per share. Is what we're getting. We'll of course get those numbers because they are having that meeting for it. And in fact, we are also going to be speaking with the management on money control later today. So we are going to get you all that action. And what we know now is that IPO is going to comprise of a fresh issue of about 365 crore rupees worth of shares, whereas the offer for sale or OFS is going to be of 4.12 crore equity shares, which means that the total issue size is expected to be around 1,700 crore equity shares. So a bigger number that we're seeing. And of course, the latest news was that of when Shilpa Shetty had entered. So when she went on to acquire stake in the company, she got in at about 41.86 rupees, which is nearly 13 times the gain if you have to count it at this price band of what we are seeing it will perhaps IPO at. So that will be an interesting IPO to look forward to. October 31st is the date that we have right now. And a lot of people interested in this count as well. Let's also let's get Brijesh to give us a couple of other suggestions he has for our viewers at this point. What are the other stocks that are on your radar, Brijesh?
Yeah, ma'am. So I think in this morning market, auto is one space where I think the amount of selling has been very less. I would like to take a call on the Tata Motors at the current price 637. There has been a decent correction. And I believe this the levels of 630, 620 is a very entry point of time, entry kind of a levels, because it has a very strong this 625 level is a very strong base for the Tata Motors. So this correction close to this level, I think it's a very good buy setup. In the near term, I think Tata Motors can go back to 680 to 700 levels. So definitely this opportunity, this correction in the Tata Motors should be viewed as a buying opportunity. After that, M&M is one space where the correction, we are not seeing any correction in the last couple of days when the market was correcting. And for the M&M, for the short term, I think 1600 plus can be the trading bet. And if somebody wants to take a longer term picture, then I definitely believe the 1700 will be the price target for the M&M. And lastly, one more stock which we are extremely bullish is City Union Bank. The results are going to come in next few days. This 125 is a very strong base for the City Union Bank, and currently it is trading at 131. We have a target of 150 plus from the trading bet, and somebody wants to take a positional can also look for the 200 plus on the higher side. So these are the few stocks I think in the falling market we can keep a watch on.
Right. Interesting there, Brijesh, that you had two auto counters there, Tata Motors as well as M&M among the stocks. And of course, there's also City Union that Brijesh Ail is suggesting. Thanks so much, gentlemen, for giving us your time and speaking with us on Money Control. But with that, it's a wrap on this edition of Morning Trade. Stay tuned, for coming up next is Opening Bell.